cannabis market is something that universally we know is growing, and because it touches almost every sector, and any Fortune 500 company that doesn't have a strategy for cannabis is really behind the curve right now.
You need a sergeant who's been in the trenches, and I want to go with someone who's intelligent and been there from the beginning and eyes on the ground, both from 36,000 feet and from the trenches.
That's Timothy Seymour with Seymour Asset Management and Paul Morse, Managing Director of Wealth Management and Alliance Global Partners. Tim actively manages a cannabis strategy with Amplify. We'd like to thank Amplify for sponsoring the live ETF Think Tank Exchange and this podcast.
We're talking about tapping into the growth of cannabis. I'm Dave Armstrong.
And I'm David Dziekanski. Thank you for joining. Hey, Dave.
David, great to be with you.
Before we get into this podcast, I'd like to let the listeners know that attending the live ETF Think Tank Exchange enables you to earn CE credits. There are always lively conversations, and this is a great way to learn and also earn credits while you do so.
Our goal in both the live show and in this podcast is to provide thought leadership by bridging the gap between investment producers and the advisors who use their products through actionable ideas.
In this podcast, which offers highlights from the live show hosted by our very own Michael Gayed and Dan Weiskopf, our guests offer historical perspective on the cannabis markets, and they discuss growth of the sector, the role of active management, and the risks to consider.
Then David and I are going to return with a few ideas that can make a difference. Plus, our advisor guest, Paul Morse, is going to talk about the Disability Rights Fund, a cause that his son brought to his attention and one that he wants to share on today's show.
Without further ado, let's jump right into the highlights.
Absolutely.
So, Tim, I want to start off with you as far as, there's clearly a lot of excitement around the space, right? There's no question about it. But I don't really know if people have sort of the historical context around the industry and investing in the industry. So, maybe start off with educating us a little bit. How did it go from, bleeding edge to leading edge? You
have a case where early stage cannabis investing in many cases was really just playing this, are they going to legalize? Is this administration actually in favor? And something called the Cole Memo, which under the Obama administration was really a landmark piece of legislation, which essentially said that the federal government was going to leave the states alone to ultimately regulate and to dictate the pace of legalization within that which they controlled. And so the story, for investors was about, all right, who's coming online first? Which countries are coming online first? Obviously, if you think about the United States, it's Colorado, it's Washington, Oregon, and then California are the big exciting stories. But and in parallel, what was going on north of the border in Canada was that there was a federal legalization effort that really became, on some level, the engine of focus for the industry, because Canada was well ahead of the U.S. on a federal level. So setting up the story for investors is that a lot of the early stage cannabis investment ideas were Canadian. Were Canadian companies, because they were the places, they were the companies that investors could invest in public markets. And truly, again, Canada's done a fantastic job with the industry. But Canadian markets are different than U.S. markets, and what issuers can do and insiders can do in Canada. And if anyone who's ever invested in oil and gas and commodities and knows some of those markets from Canada, look, that there's factors in terms of dilution and offerings and front running and things that are just adding to the chaos, the confusion, and some part of cannabis 1.0 investing that I think didn't necessarily tell the real story.
Yeah, you bring up a lot of great points, Tim. Thanks. So Paul, can you go through a little bit of a discussion about how you look at thematics and how you approach, situations like this and access?
I think investing without thematic drivers is like, trying to breathe without oxygen. So it's my compass to be thematic. And the overarching theme that I've been working with, is I'm convinced we're not a hard sell, that we're in this technological revolution that when I started in this business in the early 90s. The United States was, 5% of the world's population, but almost 80% of the global cap, and pretty much all of its consumption. And now here we have almost 600 million middle-class consumers worldwide. And that seems to be leveling the playing field and opening up even more themes. And some of the dynamic forces that are coming up there are bringing up, so much opportunity, and especially in this cannabis now.
Yeah. So Paul, though, you bring up again a lot of great points. How do you educate your clients, and in your case also financial advisors, about all the cultural changes and regulatory environment that is a great catalyst for this theme in particular?
Well, you have to ask them to be current. I mean, luckily, Aaron Gray is our analyst for cannabis at AGP, Alliance Global Partners. Yep. He puts out some great pieces. So it's important to be involved in current events, to be awake. That's the new buzzword for everyone, to be woke. But in investment terms, you want to look at these themes of aging population, and the power dynamic in this country is shifting, and with that comes opportunities for companies to fill in the void. I think the medical industry is broken. Our insurance situation is bad, and cannabis has a tremendous amount of play to fill that void. And then, some of the clients I'm working with, the technologies that they're coming out with to first address marijuana markets, somehow just in their development have discovered that their ability to alter and disrupt other industries outside of just recreational cannabis or medicinal cannabis is huge. Yeah. So if you open up the gates, things happen, and the gates are being opened, and more players are coming in. As going back to the theme of the world flattening out, we have an opportunity to bring more talent, more diverse pools in. I mean, the biases are changing because we're going to have the benefit of tapping into more human capital and more ideas and more energy in a level playing field. I think that's what I hope we're headed for.
Paul, by the way, the way that you ended that, actually, it reminds me very much of the argument for emerging markets in the late 90s.
Yeah,
and 2000s.
I was going to say that. Me too. Yeah.
Right, which is interesting kind of transition because, and Tim, I watched a few of your YouTube interviews, and I do recommend people actually check those out. You've made this point before that there's this sort of interesting parallel in terms of thinking about cannabis almost like emerging markets in that time period.
Yeah, absolutely.
Why is that, right? What's getting you most excited? Where are the similarities? Where are the differences? What are the challenges? Talk us through some of that parallel.
Yeah, and Paul, as we talk around thematic, Paul hit on 3 or 4 themes within cannabis that are also, again, parallel themes around emerging markets. And Paul talked about this emerging middle class and consumption dynamics, and so that's an obvious one that's not so obvious. And if you spent time in the cannabis industry for the last 6 years, you've heard a lot of companies talk about, we have a brand, we are a brand. Another important dynamic of why similar to emerging markets, and also why you have to be active as a portfolio manager. But what clearly is happening in cannabis is what I saw in early days of EM, which is that there's this technology leapfrog. So India, they were basically going from bicycle to car, or scooter to car, or in Russia, in the regions, they weren't putting in a fixed line phone. They were buying a cellular phone. And we all understand this technology leapfrog. Well, the same thing's happening in cannabis, especially for the brands, especially at a time when some of the most established brands in the world are becoming that much more sophisticated. And we can watch CNBC or read the Wall Street Journal and read how Starbucks and Chipotle suddenly are becoming technology companies because of how they interface with the consumer and loyalty programs and everything else that we know is happening. Same thing's happening in cannabis. So again, it's moving quickly.
Tim, for me, this is a top-down macro trade. I absolutely agree with you on that. But give us some context as to the growth rates that we're looking at on the industry, where we are today on the base, and what we're going to be looking forward to on the future.
Well, I think you've got a case here where the market is growing. Look, on a global basis as well. And so for investors, before I try to throw some numbers at all this, I just want to say that yeah, I mean, Canada is a market we've talked about. At best, Canada is a $3 billion market right now, which makes it probably at best 1/3, maybe likely 1/5 of just the size of the California market. Europe as a market, and as we know, the second largest economic zone in the world, we know what the EU is and its potential there. We also know how sophisticated, say, the pharma world is, especially the insurance world is in places like Germany, and where I think there's a scientific approach to medicine, but also the distribution of medicine and the practice of medicine and the practice of adult markets. So Europe's a huge story, but it just hasn't really unfolded yet in terms of not only the legislative pathway, but really the investable dynamics for investors here. But it's going to happen, and it's going to happen quickly. And there are the beginnings of even some investable trail, and some of the companies that are active here are going to be major players in Europe. But the U.S. market, so let's talk about that. I would argue that the top line is growing anywhere from 20 to 50%. Interesting coming out of COVID. If you looked at the data coming out of the mature states, so Colorado, Oregon, Washington, amazingly, you were seeing growth in markets that had shown some stagnation. What you saw from the U.S. multi-state operators, a term, by the way, the MSO is a term that the industry folks know very well. And it's, again, those companies that have set up shop in 1 or 2 or 3 or 10 or 14 states like Curaleaf. They're called multi-state operators, and the Canadians are called the LPs. So there's some terminology for you. But if you saw the MSOs that were reporting fourth quarter numbers about a month ago, you were seeing top line growth on an annual basis anywhere from really 40 to 60%. And what hurt some of those companies is just that sequentially those numbers actually had already spiked dramatically into the third quarter. So the fourth quarter numbers weren't as extraordinary, but that kind of growth is real. But I think the numbers are still impossible to gauge. But the size of this market is something that universally we know is growing, and it's really just about how you measure it and which sector it touches, because it touches almost every sector. And any Fortune 500 company that doesn't have a strategy for cannabis is really behind the curve right now.
Yeah, and I think that's a phenomenal breakdown. And Paul, I want to go to you because I think, for every advisor that looks at any emerging theme, there's always a question of, do you want to express it through active versus passive management? Talk us through, as an advisor, from your perspective, how do you think about that debate, especially as it relates to the cannabis space, and maybe why active is probably the more preferred way of expressing an investment there?
Well, I think you need a sergeant who's been in the trenches and fighting it and understanding it on that. So I don't think shotguns are going to work in this next cycle that's coming up. We cover 19 companies, but I think in 3 years it'll be 36 companies, and in 10 years it's going to be 100 and something companies. And as Tim said, if you're a Fortune 500 and you're not strategizing about cannabis, because it's going to affect you either directly to your product line or your employees, socially, how you fit into that context of of how these things are. Everything's up in the air, and we don't know how it's going to land. So if I had a passive play in cannabis, maybe I would look at it, but I want to go with a CMBS. I want to go with someone who's intelligent and been there from the beginning and eyes on the ground, both from 36,000 feet and from the trenches.
Yeah, and Tim, same question to you, but maybe with a little bit of a twist. So,
yep.
What kind of buy and sell rules are you implementing? Is it based on your own experience as a trader in terms of when to trim, when to add? Talk us through sort of the active part of that portfolio.
So, and in a world where I have to have purity of the asset class, so 80% of my portfolio needs to be in companies that are at least 50% or more of a cannabis dedicated revenue stream. I've got to own the sector. So being active means never owning companies that were big companies listed on the New York Stock Exchange. I won't name names because I don't think it's necessary. But there were some Canadian companies that have been very value destructive and eradicated a lot of capital. I've had one dilutive offering after another. And those are names that were never in the portfolio, or maybe they were in the portfolio for a short amount of time at a toehold, 50 to 100 basis point position, but largely haven't been in the portfolio because I don't have to own them. And during bear markets, being defensive is adding as much alpha as being, picking the right stocks and putting the pedal to the metal in a bull market. So my view, and look, how about the Reddit rebellion and how it came into the cannabis space 2 months ago? To the extent that it was clear there were some targets that were going to get lifted up by some arbitrary or not opinion within a rabid retail community, cannabis caught some of that bid. To me, being active sometimes is if you own a company that has rallied 40% in 2 days for fundamentals that, frankly, you haven't priced in and you don't think should be priced in, take some profits where you can and do it quickly. My traders are great. It's very different than me picking up the phone and trying to get a price on the wire with one of the brokers back in my EM days. But we can react to markets. And so, Mike, you asked about the discipline around this. Look, I want to be owning companies that are, going to be in the portfolio for 6 months to 3 years. But I want to do that long-term compounding. But more importantly, I want to find those long-term growth stories. But it doesn't mean that I have to sit tight because it's about understanding how to invest in the sector.
So I'd be remiss to not ask Tim this question about the risks involved, because we're talking about all the positives, but from your standpoint, what are some of the biggest risks, not just from a fundamental profitability standpoint, but are there other risks that you think people need to be at least aware of when they think about the space?
Yeah, the cyclicality of a high risk industry at a time when markets are at all-time highs is something that all investors should think about. And they should understand the risk and the beta that cannabis is going to have to other markets during a period when you start to see indiscriminate selling. I know this from my EM days, and so I don't care what the fundamentals look like here. If you see a really difficult time and you start to see central banks around the world, notably the Fed, change any kind of a tune, that concerns me. I think the corporate governance risks, company by company, are the other things that for me, I worry about. So therefore, I think these are things that investors should think about. There will be companies that have malfeasance and don't do the right thing, and or not acting in the best interest of investors. And I think, ironically, and maybe not, in cannabis, a lot of these companies have had to operate in a high compliance microscope. And I think, in that sense, on some level, I actually think practices and best practices are very, very strong in the industry. But again, companies with not a lot of capital markets background and less track record is something I worry about. I worry just a bit about the macro. I have to tell you, I don't invest on a federal timetable. When's it going to be legal? When can Goldman Sachs and Morgan Stanley fully bank it? That's not how I approach my day. That will come, but I think investors should think tactically in the sector, but as we've said, they should think thematically and long term, and understand that this industry and the ways to play it are going to change over time. It just so happens that after all this great news in the U.S. On Georgia and new states coming online, the federal elections, and these great numbers coming out, the industry's pulled back 20-25% off of those mid-February highs. I mean, tactically, honestly, the story here is there's not a story to say, boy, this has been crazy. There's been a lack of an institutional dollar coming in, and there has been a bit of a buyer strike. Volumes have dried up. The news flow has been largely really extraordinary. So, I mean, tactically, I think there's opportunities to really, to be looking at cannabis now more than ever. But again, the things that concern me around, investing in cannabis are things that are more related to the global cyclicality of markets, where cannabis fits within that. There's no question that, we need to see more institutional adoption here. And I think we're going to get that, but it's not here right now.
Tim Seymour provided some great comments there, and we wanted to add some of our own. In this section, we like to bring forward some of the ideas that we think can make a difference for advisors. Dave, what's your overview on today's discussion?
Well, it's interesting to see the evolution of this market and the comparison of it to the emerging market space, and really access and law being the biggest restrictions for investment capital. And that's why, as they talked about on the show, we saw the shift from Canadian companies now pushing further into the US as well, initially led through medicinal marijuana, but there really is tons of other investment opportunities in the space covering real estate, technology, and healthcare, and the number of offerings and availabilities is growing by the day.
Dave, I agree. And I think that's part of the reason where, for many advisors, active management can be a key differentiator. I think this is an area not unlike other emerging markets. Tim had brought this up in his discussion. Other markets that are emerging is, I guess, another way to think about the same idea, where there's going to be a lot of sorting out. Some companies are going to grow. Some companies are not going to make it. Some are obviously going to fail. And that's where having a manager who has an informed view on that particular sector and knows how to discriminate between one and the other can really add alpha for the advisor and for their investor.
We're even seeing some of the most interesting names in this space come through the SPAC market, which, as we all know, needs to be allocated to with a fine-tooth comb. So, as you alluded to.
Dave, there's a lot that I don't know about the SPAC space, and I would imagine advisors that are listening in today too share some of that. Can you offer some perspectives on how to think about SPACs and whether or not they have any merit in this area?
Yeah, I mean, the SPAC market as a whole is many different things, especially if it is invested in a company or not. So I think first off, you have to separate SPACs as pools of capital or actual investments. But in an active manager format focused in the cannabis space, you'll see investors take positions in both acquisition targets, seeking without fully diligenced their final play in the technology space that they want to take public to the market, and also more companies that have already come to the market through a SPAC listing.
Our advisor guest, Paul Morris, is going to talk about the Disability Rights Fund, a cause that his son brought to his attention and one that he wants to share on today's show.
So our ETF think tank, as we wrap up, I just wanted to highlight is about giving and sharing. So in that spirit, we like to close our discussion with an opportunity to name a charity that is important to someone. So Paul, which charity do you want to recognize?
Well, I have to say this charity is been brought to me by my son, who we were on a fencing, tournament in Senegal 2 summers ago, and we toured the facilities of the Olympic Village there, and he was really impressed with the heart and spirit of the disabled kids who weren't able to get any funding there. So he found a Disability Rights Fund. That's the name of the charity, Disability Rights Fund, and their funding is changing the landscape for people with disabilities worldwide and the shifting paradigm for charity to rights.
Thank you.
We invite all our listeners to visit disabilityrightsfund.org to get involved.
As we wrap up, we'd like to thank Paul Morris with Alliance Global Partners for his thoughts, and Timothy Seymour with Seymour Asset Management, the active cannabis manager for Amplify. And we want to thank Amplify for sponsoring this live ETF Think Tank Exchange and this podcast.
You can learn more about the ETF Think Tank and the Think Tank Exchange by visiting etfthinktank.com, your source of all things ETF ideas, thought leadership, strategies, tools, and growth tactics.
Until next time, let's keep the exchange going with your clients. I'm Dave Armstrong.
And I'm David Dziekanski. Take care.
The views and opinions expressed during this event are those of the participants and do not necessarily reflect the views of the sponsor or organizer. Information set forth during this event has been obtained or derived from sources believed by the participants to be reliable. However, neither the sponsor nor the organizer make any representation or warranty, express or implied, as to the information's accuracy or completeness. Nor does the sponsor organizer recommend that the information shared during this event serve as the basis of any investment decision, and it has been provided to you solely for informational purposes only, and does not constitute an offer or solicitation of an offer or any advice or recommendation to purchase any securities other than financial instruments, and may not be construed as such.